Strong voice, strong opinions.
Wake Up with Rob Snow returns on City News 1011.
Peter Fraser is going to be one of our regular contributors on Monday, certified financial planner. He's with Credential Q-Trade Securities Incorporated and the Alterna Wealth Management Group here in Ottawa. We call it Money Mondays. Good morning, Peter. Welcome back.
Good morning, Rob, and congratulations to you guys on the launch of the Wake Up with Rob Snow show.
That's very kind of you, Peter. We're glad that you could be part of it. So, look, the markets, gosh, it's been a rough year. The TSX is down about 14% for the year, and that's actually outperforming the U.S. markets. So down 14% for the year. October's not, historically a very good year for markets either. So far they're actually recovering somewhat. But what are you thinking about right now? What are you advising clients to do right now?
Well, I wanted to call our little chat this morning good things to remember in these bad markets, because as you point out, they've been very challenging. Strong gains have not been on the horizon. We've had no love from these markets, and sometimes they jump up and we ask ourselves, is it over, or is that going to turn out to be what some of us call a dead cat bounce? But keeping calm is the theme, and I wanted to offer a few things in that light.
Okay.
So, background to what you were just saying, of course, the VIX has nearly doubled this year. That's that volatility index, which popularly measures the stock market's expectation for how volatile things are. We've talked before about this misery index, also a useful measurement, but a combination of U.S. inflation plus U.S. unemployment also elevated, and we saw that still reflected in last week's numbers out of the U.S. So it's been hard on investors this year, and the temptation to sell can sometimes be substantial. So keeping our cool is a skill that, as investors, we're always sharpening. We're always trying to master that keeping calm and investing on thing.
Okay. So you have some bullet list points here that I want to get through. We don't have a lot of time here, so
right. All right.
We've got to run through it. But you like high quality companies, right?
I think so. Saw an article in the Financial Post last week by Peter Hodgson. I think it pointed out something really important and made a lot of sense. Your companies, if they're good companies, probably got richer, for example, last week. And we can ignore for the moment whether that means the stock price went up or down. But if you do buy quality companies, then your share is worth more as cash flow piles into that company. And the example he was using was Alphabet, that collects something in the order of $260 million or so every day in cash. So,
wow.
The stock may be down, but the cash in the company is up, and it kind of becomes like a being paid to wait thing.
Okay.
Also, not everything in a nasty bear market goes down. So some stocks, in fact, still go up. And it's always said that there's a bull market going on somewhere. In Canada this year, we absolutely can say that about our energy sector. So, not everything always goes down in a bear market. And, of course, the being there matters. New York Life published a chart last week that I really liked about 200 years of stock performance with average annual returns there about 9.5%. And being there isn't just a mantra, Rob. It's a fact that missing the 10 best trading days can hurt. And we saw this the first week of September when the S&P jumped almost 6%. And that was just in the first 2 days of that week. So sounds a little bit pedestrian, but doing nothing can often be a very worthwhile investment strategy.
Okay. And bad news will be good for a while.
Well, I think so. Some of those bad metrics underscore the fact that maybe this medicine is beginning to work. So, some of this stuff, it's almost like you nearly kill the patient with the cure. But if this bad news ends up pointing towards an exit here from some of this, particularly punishing interest rates, that may be in our favor.
Yeah.
So, times like this very important to take stock of your plan, take stock of your advisor relationship. I mean, in times like this, they're also a key part of the survival pack. And, this won't last forever if common sense tells us anything. But I'm not sure that we're done yet. But, it's been our hope to provide a few tips that listeners can focus on with genuine and verifiable positive factors that help us keep calm in these tougher times.
And if somebody wants to reach you by email for a follow-up conversation, Peter, how would they do that?
Yeah. Me or more of what you and I have talked about is always available at Money Mondays at alterna.ca, Rob.
Okay. Thank you, Peter. Looking forward to speaking a little bit earlier on Monday from now on.
Thank you.
Bye-bye. Yep. Peter Fraser with Money Mondays, certified financial planner, Credential Q Trade Securities, and Alterna Wealth Management.